Did you know that one simple mistake in your 20s could set you back by decades when it comes to your financial future? What if I told you that a single decision could impact your lifestyle, wealth building, and peace of mind for years to come? In this video, we're going to expose the top money mistakes that you need to avoid in your 20s, so you don't fall into the same traps that hold back so many young adults. Stick with me until the end because mistake number 6 is the one that could secretly drain your wealth without you even realizing it. Welcome to Fintech Innovate AI, where we empower you with smart, practical finance tips to set you on the path to financial freedom. If you're looking to take control of your money and make better financial decisions, hit subscribe and turn on notifications because you don't want to miss what's coming next. Let's get started. Mistake number 1. Winging it without a financial plan. You've probably heard the phrase, "I'll figure it out later." We all do it, right? The problem is, that later could be much further down the road than you think. The truth is, without a financial game plan, you're driving blindfolded through life. Imagine you want to get somewhere, let's say a new city. Would you just start driving without a map, hoping you'll get there eventually? Probably not. The same goes for your finances. Without a roadmap, your money just drifts aimlessly, and before you know it, you're stuck in a financial hole. So, what does a financial plan look like? It's simple: know your monthly income, track exactly what you're bringing in. Understand your expenses, from rent to coffee, track everything. Set short-term and long-term goals. These goals could include paying off a credit card, saving for a down payment, or building a 6-month emergency fund. Financial apps like Mint or YNAB, You Need a Budget, can help you break things down and set clear goals. Mistake number 2. Using credit cards without understanding them. The allure of credit cards. They're like magic: swipe, and your purchase is made. But here's the thing, credit cards are not free money. They're loans, and if you don't use them wisely, they can lead to massive debt. Here's how people often make this mistake: they swipe the card for everything, assuming they can just pay the minimum. But minimum payments typically only cover the interest, which means you're stuck paying off the same balance month after month, year after year. So, how do you avoid this trap? Follow these tips. 1. Pay your bill in full each month. This way, you're avoiding interest. 2. Set up auto pay to ensure you never miss a payment. 3. Keep your credit utilization ratio under 30%. This boosts your credit score and reduces the risk of spiraling debt. Credit cards can be a powerful tool for building your credit score and earning rewards if used correctly. But if you treat them like a free pass to endless spending, they'll turn into a nightmare. Mistake number 3. Thinking you can start saving later. Many young adults feel they don't have enough money to save, so they put it off. But the earlier you start saving, the more money you'll have in the future. And here's the kicker: it doesn't take a huge sum to begin. Did you know that saving just $50 a month can turn into over $100,000 by the time you retire? That's the power of compound interest, and it's why it's crucial to start saving in your 20s. Here's how you can start building your wealth. 1. Set up an emergency fund. Aim for 3 to 6 months worth of living expenses. This is your safety net. 2. Contribute to a retirement fund, even if it's just a small amount. Open a Roth IRA or a 401k. 3. Invest for growth. Apps like Acorns let you invest spare change, and platforms like Robinhood allow you to start investing with just $5. The key is starting small. Mistake number 4. Ignoring student loans or debts. Student loans, they're a reality for most people entering the workforce. But just because you have loans doesn't mean you should ignore them. The longer you let them sit, the more interest you'll pay. And before you know it, your balance is way higher than when you started. The mistake most people make is thinking that the minimum payments are enough. Unfortunately, they usually cover just the interest, not the principal. To manage student loans, refinance if you qualify for a lower interest rate. Pay extra on your loans whenever possible. Even $25 a month can make a huge difference. Look into loan forgiveness programs like public service loan forgiveness if you're working in a qualifying field. Taking control of your debt will free up your future to do the things you really want, like investing or buying a home. Mistake number 5, not defining your financial priorities. Your 20s are a time of discovery, but they're also a time when you must define your financial goals. The problem is, many young adults get caught up in the trends around them, like upgrading their lifestyle, buying things they don't need, or chasing the latest fashion. This is what's called lifestyle inflation. Maybe owning a home is your goal, or perhaps you want to travel the world debt-free. Whatever it is, having a clear vision will help you make decisions with purpose. Here's how to get started. 1. Write down your financial goals, both short-term and long-term. 2. Create a realistic plan to achieve those goals. 3. Review your goals regularly to stay on track. When you prioritize your financial goals over temporary desires, you'll avoid falling into the trap of lifestyle inflation and impulsive spending. Mistake number 6, falling into the trap of lifestyle creep. You get a raise, a bonus, or a new job, and suddenly you want to upgrade your entire life. You buy the latest tech, take more expensive vacations, or rent a fancier apartment. And before you know it, your income is swallowed by higher expenses. This is lifestyle creep, and it's one of the most dangerous financial mistakes you can make. It's the reason many people live paycheck to paycheck, even though their income increases over time. To prevent lifestyle creep, live below your means, keep your living expenses fixed even as your income rises. Save and invest your raises instead of spending them. Stick to your financial goals and focus on long-term wealth building. Every dollar you don't spend today will help you build the life you want tomorrow. So, let's recap the critical money mistakes to avoid in your 20s. Start with a financial plan. It's the key to financial freedom. Use credit cards responsibly to avoid debt spirals. Start saving and investing early to benefit from compound interest. Tackle your student loans head-on to prevent long-term debt. Define your own financial goals and avoid lifestyle creep. By avoiding these common mistakes, you can set yourself up for a financially secure future, no matter where you are in your financial journey. If this video helped, like it, and don't forget to subscribe for more insights on how to take control of your finances, build wealth, and live life on your own terms. Hit the notification bell so you never miss out on content that can change your financial trajectory. Thanks for watching, and remember, financial freedom starts with smart decisions today.